Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 328 for January 24th, 2022. We are recording this at 1 p.m. Eastern Time. I'm sorry. We are recording this at 10 a.m. Eastern Time, a special episode of Crowd Forecast News to kick off the larger Synergy Traders 2022 watch list event, which will start immediately after today's episode and go until 10 p.m. tonight, as well as tomorrow. We will be going from 10 a.m. to 10 p.m. as well. So we're going to have 24 great presentations and a lot of good education, and should be a great event. So I also wanted to thank, Synergy Traders is a collaboration between Anka Metcalf of Trade Out Loud and myself, David Kosmeter of TimingResearch.com. And I also want to thank my co-sponsors for the Synergy Trader event. So that's BigTrends.com, MoneyMentor.com, OptionProfessor.com, Altavest.com, PowerCycleTrading.com, TradingLiveOnline.com, and MojoDayTrading.com. So thank you to the co-sponsors. So yeah, we're going to get started with Crowd Forecast News right now, and I'm going to go ahead and turn it over to the Option Professor to moderate.
Okay, thanks, David. And what a day to open up with here. We've got the VIX accelerating to the upside. We got the S&P accelerating to the downside. And we had the Nasdaq breaking its 200-day average, which the last two times it did it was March of 2020 and the Q4 of 2018. So having said all that, it seems like we've gone way beyond the boy who cried wolf here. And so it's going to be very interesting to hear these very experienced and knowledgeable people try to put this mess into some kind of context and hopefully give you some insight that will be helpful to you during this trying time. We're going to have Sonny Harris with us and Michael Feligera. We've got Leslie from Trading Live Online, and also John Thomas. So we're going to go around and introduce ourselves real quick, and let's get into the meat and potatoes here, okay? Start out with Sonny Harris. Hey, Sonny, quick background on yourself, and then, of course, what's going on at your company?
Well, I'm a mathematician. I've been trading for 41 years. I use my Sunny Bands indicator in everything that I do. And let's see, I'm a grandmother. What else?
And you're going to get into all of what Sunny Bands is and everything else later in the broadcast.
We're going to talk about that in depth if you want.
All right, perfect.
I can even share my screen if you want.
Perfect. All right, next up is Michael Feligera of Logical Signals. Michael, quick background on yourself, and again, a little bit about Logical Signals.
Okay, good morning, everybody. I am Michael Feligera. I am the proprietor, the owner of logicalsignals.com, but I also have an additional site, tradershelpingtraders.com. I have been trading since 1979. I originally started out as an options market maker here on the Pacific. I've traded in London, Amsterdam, Germany, and then back out here in San Francisco, where I continue to trade. My focus these days is I am a day trader.
Okay, perfect. And John Thomas, Med hedge fund trader. John, quick background on yourself and what's going on there.
I've been in the market 53 years, run the Diary of a Mad Hedge Fund Trader, which you can find at madhedgefundtrader.com. I am a global long short macro player, ran a hedge fund for 10 years, and we are currently massively short the market, which is working, and short bonds, which are working even better. So again, madhedgefundtrader.com, and I look forward to working with all of you.
Sure. Okay, and Leslie, Trading Live Online, a little background on yourself, Les, and what's happening at your company?
Well, good morning, everyone. Thanks for inviting me back. Yes, I'm the founder of Trading Live Online. I've been in the markets for about 25 years. I guess I'm the newbie here. And I teach trading, I trade, and I use specific pattern recognition. And later today in my presentation, I'm going to be going over the specific patterns that were at the highs in the major indexes for this drop that we're seeing. I'm going to go in-depth analysis of this drop and where I think it might be going.
Sure, that'd be very helpful. Okay, well, this week we do have some hopefully offsetting penalties here. We've got earnings from tech, although the growth of tech earnings has really been shrinking since Q3 of last year. But we do have IBM, we have Microsoft, we got Tesla, Intel, and of course, Apple on Thursday. We got the Fed meeting. So there is a lot of stuff coming on after today. So we are going to start out with our normal question of where is the S&P going to be between now and Friday, using today's opening as a reference point. So I always use SPX as a reference point, and that's 43.56. Which is the opening today. And where do we think it'll be on Friday? Up, down, sideways, and your level of confidence. Is it 50-50, 60-40, whatever it might be. So Sonny, where do you think from 43.56 we'll close on Friday? And how do you feel about it?
I'm looking at the futures contract. Hang on, SPY.
Well, like I say, just take 10 points off of what I said and you're there. So, yeah.
Oh, well, that's true.
Yeah.
No, I think we've got further down to go yet.
Okay, so down would be your call. And what do you think your
yeah.
probability is on that, or confidence level? Yeah.
It's pretty high on this one. Usually I'm 50-50 on everything because I'm such a short-term trader that it doesn't matter to me because I trade 5-minute charts.
Right.
But I think we've got further to go from here.
All right. And you're pretty confident of that. What about Michael? How are you feeling from 43.56 until Friday?
Lower. 75%.
75%. And John Thomas, what are you thinking?
I think we go lower first and then get a counter trend short covering rally on Friday, which
can we get back above 43.56, or do you think it'll be under that number?
We could get above 43.56, but then you want to sell into that rally with both hands, because I think this sell-off could go on for months.
Right. Okay. And Leslie, how are you feeling?
I think we're going to see some pretty strong rallies, but I think that they are going to be opportunities for selling into them. As far as ending lower on the week, I think that Friday is probably going to be more of a down day, but I do think we're going to see convincing rallies to the upside that are going to be really good short opportunities.
So you think we could get above this 43.56, but you think by Friday?
I think a little bit of a strong rally up there might pop above there.
Yeah.
I don't think it's going to stay there for long.
Right. So you think it could go above there, and you're at least 50-50, 60-40 on that one?
Yeah, I'd say that's a 60-40. Let's go with that.
Yeah.
The market gets to do anything it wants to do. And when we get these types of declines, they can just really accelerate.
Oh, yeah. I mean, when you get this VIX above 30 and you get every single moving average blown out, and now you're just hoping, obviously, that they call the dogs off. That's not the most confident buy signal. You know what I mean?
I would not be only short-term buys, for the traders that are experienced with this type of volatility and ranges.
And that VIX, that 35, first the 20 area is important. And then of course, when you get to this accelerated point, 35 has been a number where it has stalled out. And if it gets above 35 and you start seeing a 40 or 50 print, then you start looking at something that might be the abyss. But today's high of 35.34, which is what I'm showing right now, is a similar high on the VIX that we saw in early December and also back in February. So it has been a neighborhood where the VIX slows down. And when the VIX slows down, generally you get some kind of a rally. But that's still an open question, because that high on the VIX was made probably in the last hour. So, okay, let's talk about fundamentals and technicals and stuff like that. In other words, what are you seeing coming up on a technical or fundamental basis, Sonny, that is going to be very important for you?
Well, I'm looking at two things right now on my chart: the Fibonacci lines, retracement lines, and my sunny bands, which purple is on top on the DMA, meaning it's been short on a daily chart since the day after the top. So it's not signaling long at all yet. I think we have several more days to go on this. Fundamentally, I don't look at any fundamental.
Yeah, so forget about that.
Everything's technical for me.
With the proliferation of technical analysis and everyone's familiarity with it, that could be another feature that is a little different here in that, like all your stuff is showing negative. I'm sure there's other stuff that's showing negative. So it's hard to come up with buyers when every single thing that people are looking at is showing negative. You know what I mean?
Yeah, I couldn't
And that-
agree more. Everything that's driving the market now, you can learn by buying a book at Amazon for $5.
Right.
The trouble is that everyone has bought that $5 book.
Right.
Anywhere from an individual to a $20 billion hedge fund that's using algorithms. So,
and there's no liquidity right now on the buy side, and there's an awful lot of there's an awful lot of selling coming in. So that's a dangerous thing. That's why the VIX is at 35, and that's why if it starts going 40 or 45, this thing could do whatever it wants to do.
yeah, there's an immense amount of selling out there by people who missed the top.
Yeah.
And have been trying to get out on every rally ever since, and because of that, every rally will fail.
Yeah. So anything, Michael, that you're seeing? I mean, you look at Fibonacci's. Is there a Fibonacci target on this dive?
Yeah, there
you
is.
got?
And the first Fibonacci target that I have is 4185.
Okay,
The secondary Fibonacci target that I have is 37 or 3800.
that's what I got.
And so really what's going on in my mind is like, I really do try to look at the market technically versus fundamentally.
Right.
I have to agree with what Sonny said, that I don't look at fundamentals. Fundamentals are deceiving. And I
Right.
think that what's happening right now is we get these earnings reports. It isn't so much the actual earnings that they did for last year, it's the forward guidance. And
Yeah.
they're having to take into the realization picture is, well, what can we expect moving forward? So what really kind of comes in, if you want to talk fundamentally, is that inflation is very real. Inflation is real. And as far as our own Federal Reserve, they're behind the 8 ball right now. And so what we've got pressuring this market today is the fact that the Fed starts their meeting tomorrow. So really, it's like they're looking at the reality that they ignored for so long. And now the reality is they are going to raise the rates. And it's like, well, how much are they going to raise the rates? So that's the big question now. So what I'm looking at it is like, I think for Wednesday, when the market has to deal with the actual results of the Fed meeting, the surprise would be that they don't raise it enough.
Yeah, well, that's how, that's why this thing is probably dumping to put so much heat on them.
Well, I
they
think
don't
it's
do
dumping
anything.
because number one, we're now running into margin calls.
Yeah.
So I think
Also,
that-
the growth rates too, right? I mean, tech was a 40% growth rate in Q3. It's supposed to be 13% for Q4, and then it's supposed to drop to low single digits in Q2 and Q3, and then jump in Q4 to 12%.
understood, but that's just an estimate.
Yeah,
That's just
well,
a-
I'm
that's
saying
just a
the
guess.
Q4, yeah, it's estimates. Yeah, it's estimate, but it's not. I don't think it's estimates by morons.
I don't think so either. I don't think so either, but I think if these are the same quote unquote people that talk the market up.
This is off of Bloomberg, and I don't think
Bloomberg
Bloomberg was referring to people talking the market up or down. They were
Well,
just talking
I
about
get you.
statistics.
I'm not trying to put anybody down. I'm just saying that a lot of times I think that what I attempt to do
Mhm.
is I am looking at the price action that's happening right now.
Yeah.
And then I'm going to put that into, like I do Elliott Wave. Elliott Wave has been showing us, as Sonny said, from that top.
Yeah.
From that top, it has been saying that was it. That was
Yeah.
it, folks. The
And that
top
3,800 number you got would coincide with slowing growth, wouldn't it?
Of course, sure.
Yeah. So in other words, the numbers that they talked about on Bloomberg don't sound far-fetched. It sounds
No,
like might
they
be
don't.
realistic.
And don't misunderstand what I'm saying is
Yeah.
that if you're trying to find fundamental reasons, you're going to be able to find them, and it'll coincide with what Fibonacci, which does not take fundamentals into consideration, is also saying. So you will find that blend where they match.
Yeah.
I'm just saying I don't come up with that number.
Oh, no. I just like to listen to everything and then make your own decision.
Yeah.
John, I got something for you because, you sometimes look at a more macro view in addition to your short-term view. And, the macro view remains that the 30 to 50-year-old demographic is fantastic. And that is supposed to be extremely positive for the market. And then, of course, negative real returns is very good for the market. And on a longer term basis, those two things are not going away right away. So I'm wondering, do you think on a longer term basis, we still have an extremely robust stock market potential, which would make people start to look to buy something on the bigger break, right?
The long-term outlook is spectacular. We're looking for the Dow to go up 20 times from here in the next 10 years.
There you go. Okay.
But you have to live in Silicon Valley to see that.
Yeah.
The technologies that are coming our way that we get beta tested on.
Right.
Yeah, the long-term outlook is great. However, we have an extreme overbought condition to work
Right.
off.
Right.
Thanks to the Fed, thanks to all the Fed liquidity,
Right.
which has been accumulating for 13 years now.
Right.
All of the 40 trillion that was created out there is still around in circulation. They haven't started to take it away yet.
But John, I got a question for you. I heard something about M2 money supply peaked about a year ago, and it's been coming down pretty precipitously. Do you believe that statistic? I don't
No, I
follow that.
don't. I think it's still growing.
Yeah, because they've been buying
The
bonds.
Fed
Right?
is still today injecting
Right.
somewhere around $100 billion a month into the monetary system.
Right.
We're still expanding the money supply at a record rate, probably around 30%.
Yeah, that's what I thought. But
to
this
get off this overbought situation, I think we're in for a replay of the December 18 crash where we
Yeah.
20% in about a month.
The chart that hit me today was the 200-day moving average in the Nasdaq. The last time they went into the red zone like this underneath the 200-day was March of 2020 and the Q4 of 2018. I don't think that's coincidental, and I would view that as a pretty big caution flag.
Yeah, well, the battle this year will be 30% earnings growth among the big companies against a shrinking money supply and shrinking valuations of the stocks. And by the way, it's not an unknown how many times the Fed is going to raise interest rates. They're going to raise interest rates 12 times, a quarter point each. That'll take us up to a 3% overnight rate in the next 3 years. And that is a normal rate.
Yeah, no,
that
exactly.
is not high by any means. So
this guy
I
from
think the market-
BlackRock said that the Fed has done this unwinding once with set parameters and one with open-ended. And he says when it's open-ended and lacks real clarity, things unwind it's a very rough landing. And
Yeah.
so that's what I think people are going to be kind of looking for. If these guys are going with we're going to go open-ended and we're going to run off the balance sheet in a not strict way, then the markets are not going to like that, is what the guy was basically saying.
Yeah, well, VIX believes that scenario.
Yeah. I mean,
VIX just hit 3770.
Wow. Yeah.
And
Once it broke
it's
above
every man
25,
for
it was schools
himself.
out. Yeah.
Forget logic, forget technicals. People just want out at any price.
Yeah. There's nobody on the other side.
It's
All
a
right,
one-way
Leslie.
market.
Leslie, you've got a lot of different indicators that you look at. So what are some of the technicals and fundamentals that you might be looking at during this decline?
No, I don't look at fundamentals
okay.
either, and I just use a few indicators. But I use mostly patterns and some fib retracements. But I think you really have to be going out to some of the longer term charts right now, weeklies and monthly charts, to get a clearer view of where this market might be going. And I think I use simple things like looking at the size of some of the past swings. I mean, just mentioned the 2018 drop. And if we get a similar drop to that, that's going to bring us down to a fib of 382 retracement using the low in 2020, not the low of 2020, but I'm using the low from September because that's where one of our larger up moves started. And so that using sort of, cloning the drop from 2018, dropping it over to the high right now, that brings us down to that 382, which is right around just above 4,200, which we might reach today or tomorrow and then get a nice bounce.
Okay.
But I think longer term, we're going to be seeing lower prices than that. And I think we might be getting down somewhere between 30, this is a little bit of a broad range, but at 38, 3,900.
Yeah.
Maybe dipping below that 4,000 level. So those areas to me look like some strong support areas.
Yeah.
A
I have
larger move.
a
Oh, I'm
20-year
sorry.
graph that I look at that has the moving averages 1 year, 2 year, 3 year SMAs, and the 24 comes in around 37.90, and the other one comes in around 3,500.
Yeah, in fact, I'm seeing if we take the move from March of 2020, and we're just
Mhm.
looking at the size of that move from the high to the low, and we drop it over and clone it to the high, the recent high we've had, that is bringing us down to about that level you just mentioned, right?
Right.
Around
Right.
the 3,600
Right.
area, you know, give or
35,
take
36.
a
Yeah.
couple hundred points.
In this
These
market, if
things
you could
tend
get
to
within
skid.
100 points of a turning point, you'd be a hero, right?
Well, once they get closer to it, then I start scaling down to smaller charts. And the
That's
pattern
smart.
recognition that I use usually will be showing patterns. You know, we'll start to form some buy patterns, which I don't see quite yet.
Mm-hmm. All right. Well, Sonny, you're working with mostly the indexes, or are there individual stocks that you're working with on a short-term basis?
Well, I trade the E-mini on a 5-minute chart, 1 and a 5-minute chart, actually. And then I buy stocks for the long term. It could be months, it could be years. I've got a lot of losses I'm sitting on right now. Well, I'm going to be in them for 3 to 5 years. So yeah, I do trade stocks too.
Now, when you're dealing in the 5-minute graphs, like on a day like today, are you getting a situation where you're catching a pretty good ride, aren't you?
Oh yeah.
Because there couldn't be too many buy signals in a day like today, right?
No, absolutely not.
So this is a good day where things on a short leash could actually pay off quite a bit, huh?
Yep.
True. Very true.
Michael, how about we look at something else besides the stocks for a second? And how do you feel about that gold and silver?
I find it very interesting that they're kind of selling gold, but then again, gold has just been in this box since
Ever.
June.
Forever. Yeah.
Yeah, forever. And I think that what really kind of comes into play is just eventually, if we really start to pull the plug in the market, which actually it's been a long time, but there's one point that I agree with John on, and that is that particularly in the Nasdaq, the pattern in the Nasdaq right now to me is that it's going to reach a low, and it may get far enough below that the 13,000, which is now it's into that. It's dropped below 14,000 now. That it will put in that low, and it could drop another 500 points from here. But then it has the potential from that low to rally to new all-time highs. Now, I know that that's really hard to look at and accept. And again, you don't want to misinform people to start jumping in now. Now is not the time, but the potential exists. In the S&P, it's a little bit different. Yes, it's going to be setting itself up for a very strong rally when this particular leg of this correction is done, but it's not going to take it to new highs. So there's a little bit of a dichotomy going on here. And so I actually think out of this particular move, now that the S&P has broken below the weekly 50 moving average. What is that setup? The setup is that it's likely going to drop down to the 200 weekly moving average, and that's at 35.65.
Yeah, yeah.
So,
but on the getting back to the gold here, I mean,
I'm sorry, you're right.
It's still
gold, I think I continue to just keep gold as a core position.
Yeah. But you would think if it breaks 1775, there might be a deflationary liquidity crisis going on?
There might be, but I'll tell you what, Jim, what I do is that if I'm having a long position gold, which I do, then, if you're going to try to say, well, if it breaks below, what can I do? Well, there are puts, and you just load up on the puts.
Yeah.
Because you've got to protect your position. It doesn't mean that I'm going to get out of my long position. I'm going to be adding to my long position, and I might be either selling puts or I might be buying puts because I need the protection.
Now, one last thing before I let you run on the NASDAQ. You just made a statement that the NASDAQ may have a very large potential. The ARK fund, I was told, or I heard, has a price to sales ratio very similar to the NASDAQ, and it has 2 times the revenue growth, which would mean that at some point, the ARK funds and all the disruptors there might be a heck of a better buy than the Nasdaq. How do you feel about that?
I actually think that Kathy Woods is a very smart analyst and a smart trader. I think that what she's going to find that people are going to find fault with is that she's either holding on to these positions. But again, like Sonny mentioned, you've got to put on that thinking cap of being in it for the long haul, being in it for the next 3 to 5 years. And I think that if she's smart, she's doing enough within those funds to either add or to go. And so, yeah, I agree with that statement that you just made. But I think that she may be having to adjust her model. She might be having to adjust her algorithms so that they're more reflective of actually what's going on, because you don't want to get in too early. The Nasdaq has potential to drop to 13,396. And that's an area that I find that there's going to be a lot of Fibonacci support. It's all clustered right around there. But in the meantime, as we start to drop, let me put it this way, what really takes place that I think people forget, when things get so overvalued, you're going to get this panic selling because they're like, oh crap, we're going down. Now, if you just look at Elliott Wave doesn't take fundamentals, but what it will tell you is that we're dropping in a third wave that is going to be big. It's going to go fast. It's going to accelerate. Second thing, when it starts to break below moving averages, what is the picture? The picture is turning negative, but it's telling you it's going to drop to the next moving average. The market will always go to value. So right now we got more sellers and buyers. They need to take this market to where the buyers will step in.
Yeah,
They haven't found it yet. They haven't found it.
All right, John, I just want to ask your feeling, because you're very knowledgeable at all different tech, and you're very keen on tech. Do you see a value in the ARK fund? I mean, if it gets down about $62, it's about a 61% drop off the high of 160. Do you see any value when this thing settles in the ARK disruptors?
Someday.
Yeah.
ARK is a bull market fund. You don't want to even think about it until we get the final washout on this move,
right?
Which could be down 20%, by the way. And we're back into a prolonged technology-driven market. And it could be years before we get to the sort of conditions that ARK prospered in 2020. So I've been telling people to avoid ARK. If you want to buy ARK, lie down and take a long nap first.
Right.
And when you wake up, you'll find something else to buy. Call it the extreme bull 10x bull fund.
Right.
That's what it really is. And you don't want to go anywhere near that territory at this cycle point in the Fed tightening cycle. I mean, It's like a perfect inverse of where you should be right now. And by the way, Bitcoin is down 10% this morning too.
Yeah, people will jump on Procter & Gamble long before they'll jump into some of the innovative stocks when things get rocky and tight.
Yeah, it's like you do. It's like the two Cisco's trade. You want to be in the food Cisco now and not the tech Cisco.
Yeah, Leslie, do you have some different markets that you think might be setting up for something besides maybe just the index?
Well, I think watching the gold market, I'm watching simple GLD. You had it up there and it's in a big coil.
It is.
These are the types of patterns that precede very large moves. So, when it comes out of there, is anybody's best guess, but just start drawing in those levels. But I I'm watching that pretty closely. And then I do think just some of these really old, boring, stodgy things like symbol CL, Colgate, Palmolive, things like that are actually also in large ranging types of patterns that are up towards the top ends of those patterns. So some of those stocks I would be keeping an eye on as well.
Yeah, because the staples, actually have held up a lot better than a lot of stuff, but they also, they had a nice little run up there for in the beginning of the year. And so there is some juice in there that maybe if people need to grab something of value to offset other losses, maybe they'd grab those too, right?
Right. Yeah. Or maybe they lose less than some of these other, stocks are going to do, sectors.
Right. Sonny, you want to go into a little bit about how you come up with the Sunny bands and maybe a little bit of what they're indicating now as far as the range that we could be looking at on S&P, let's say?
S&P, sure. Sunny bands are actually a development of my master's thesis in mathematics, where I was trying to find smoothing algorithms. And when I was a new trader, I found that the whipsaw always killed me. You catch a nice trend and then you get in a sideways period and give all your money back. So I developed the dynamic moving average, which eliminates a lot of the whipsaw, if not most of it. And then I put a 1.2 and 2.0 average true range bands around that dynamic moving average. And that's what I call the Sunny bands. And it's magical how the price can go right down to the lower band and right back up to the upper band over and over and over again. The lower band right now is at, hang on one second, right? 41.63. Let's see, is that right? 41.59. That's where we are. So we've got at least that much left to go down.
Okay. And so that gives you a little bit of an idea on what the Sunny bands are telling you. Michael, I'm looking at industrial metals lately, and Cleveland Cliffs has fallen off a cliff, no pun intended. And so has copper with Freeport-McMoRan. Both were very popular there for a while because they were going up very nicely, but that train seems to be reversing. Do you see that as an indicator of recessionary stuff that could be happening, or what do you think?
I haven't really followed any of I haven't followed copper in a long time, but copper has always been used as an indicator. So if in the position that it's in, I would agree with you that we might be heading into more problematic areas. But no, I don't think that we're going to be dropping like what they might be indicating. I don't look at it that way.
Yeah, because we were down 7% or better on Freeport-McMoRan today, and that was kind of something that people held because of the infrastructure bill and all that kind of stuff.
Right.
And the Cleveland Cliffs is more industrial metals like steel and all that kind of stuff. And
But
that's
we have
gone
to
from
take
20. That's gone from 24 to 16 in a week. So 24 to
that's a big
16 in a
move.
week.
I agree with you. It's a big move. So look at it maybe a little bit differently, that it's not so much that those traders are now suggesting something different. Maybe they're just getting out because the whole market is dumping. Maybe they're getting out because they've got margin calls. Again, we don't know. So I always, that's why I kind of shifted from trying to mix fundamentals with actually what the market is doing.
Yeah.
Because the markets have turned to technical trading for quite some time now.
Yeah.
It doesn't mean that fundamentals still don't have a play, because obviously they do.
Well, they'll obviously explain. I mean, obviously, when the market started giving you sell signals in March of 2020, the reason behind it is they're closing the whole economy down. So that's a fundamental, and the technicals obviously match. Same thing here. Freeport-McMoRan goes from 46 to 38, and Cleveland Cliffs goes from 24 to 16. The next news in the paper could be,
right.
pretty good
They give you,
slowdown.
yes, the fundamentals will follow. So
Yeah.
You're right. So in that case, then we might get a clearer picture of what's actually happening in those. But I still believe the infrastructure package, I think, it could be a killer, but I think that something will come through, and therefore I would expect the stocks that rallied on the hope that it was going to go through will return, will come back based on that, because I just think that what is needed in our country is going to outweigh any of the financial stuff. And we're going to have to spend the money. Sorry?
Not with 50 Republicans in the Senate.
Yeah, there's not a whole lot that
crash
gets
the
done because
economy.
it's Hatfields and McCoy relationship.
But
down
you
there.
know what? I can't really, and you're right, but if I'm going to start mixing politics with what is actually needed, I think that eventually the Democrats will get it through, and it may win by one. But I do believe that it's going to go through because it's something that is absolutely necessary, and the politics will have to be put aside, and it's going to be what is best for the economy and the country versus what's best for them getting reelected.
Hey,
Yeah, the
John,
Republicans
I wanted to ask
crash
John a
to win
quick
the next
question.
election.
Yeah, John, I wanted to ask you a quick question because you've seen more than one election, right?
All
We
the ones since Eisenhower.
Since you've been voting since the Ice Age, what is the story in your mind on the fall elections? What's that going to do as far as influencing the markets? Because, I mean, the fever pitch is going to be, it looks like it's going to be off the charts.
Well, let me ask you these questions. In 10 months, the pandemic will be gone.
Right.
The unemployment rate will be 3%. The economy will be growing at a 5% rate.
Mm-hmm.
The supply chain problems will be over, and Ukraine will be a dating site for older gentlemen. So, given all of that, you tell me how the election is going to go.
Yeah.
Oh, and also the Republicans haven't paid the bill yet for January 6th. There hasn't been a national election since then.
Right. Now, so you're painting a little bit of a camouflage picture of that things are going to be, and some are doing the same, that we're going to have a fantastic picture by the end of the year. Having said that, these guys that are announcing this week, Microsoft, Intel, Tesla, and Apple, would you be using these drops to accumulate a position in those? Because again, Intel's got all that fabrication stuff going on in Ohio and Phoenix, and Tesla obviously is the leading dog in the electric, and then Apple, of course, is an animal to itself, and of course Microsoft is now getting into the gaming stuff. So would you say those four stocks in the first half of the year would be something to position in for the second half?
The long-term outlook for the big techs is absolutely spectacular. They're continuing at a 30% a year earnings growth. I think by the time this washout ends, you'll be able to do an at-the-money 6-month call spread on any of these and make 100% return. And by the way, that's exactly what we do, is design leaps in the best quality stocks at the best time. So.
Yeah. And then you got limited risk. So if it doesn't work out, at least you know exactly to the penny what you're going to be risking.
Yeah, we think we could make more money this year than we did last year.
Mm-hmm.
And last year we made 90% for our clients. But it's going to be a second half game this year. The first half is going to be about survival.
Right.
And the second is going to be about 100% gains.
Right.
By the way, the election would be a great trigger for that second half monster rally.
Leslie, there's a growth to value ratio that I keep an eye on that rolled over and peaked in December, wherein value overtook growth as the place to be. And it was at a very extended level, which means that it could have some runway ahead of it. Do you watch growth versus value at all? And do you see a situation where value would be the place to be looking forward?
Well, I honestly, I focus on the indexes
Okay.
most of the time, but a couple of months ago, I did happen to notice in some of the ETFs that there seemed to be a transition going on between the growth and the value ETFs, and so I do think some money has moved into value.
And one last thing, since you do look at the indexes, do you look at the Russell? Because the Russell is the most sold off one, like IWM is one of the most sold off indexes. And that's, of course, small caps. Do you?
I do. Follow the Russell, I think has really had some interesting things going on with it. Just a second, I'm just pulling my Russell chart up real quick as we speak.
Yeah,
Give me
because the
just a
longer
sec.
term
That's
stuff,
terrible,
like you
by the
remember we were
way.
talking those long-term charts, the next
Mhm.
levels is 187 and 177, according to what I'm seeing on IWM. If we could see IWM, that would be helpful. That's the Russell.
Yeah, I'm looking at the Russell index, but we can use that. It's got the same pattern. Again, you can see that long sideways coiling pattern. It had a false breakout to the upside, didn't hold any support coming back down, and has just plummeted,
Yeah.
plummeted down. And I think it's got more downside. And the Russell, is a bellwether
Yeah.
of the small cap. So I think it's going to be worth watching this index and to be doing analysis on it to kind of help time into a turn with those small caps back up.
Any of your longer term work looking at 187 or 177 as a place to buy and defend against?
Give me just a second.
Because I mean, this is real value. I mean, the darn thing was at 244, when we had breakfast, you know what I mean? And things are already down here.
Well, God, what time are you having lunch?
Well, I'm just saying, it's got to stop raining at some point. This can't be 40 days and 40 nights, I don't think.
Yeah, well, I'm using the Russell RUT.
Yeah, it's the same thing.
Symbol, right? But I'm looking at,
This is how you play
down
it.
the 2018 highs. I think it could get down to that level and test it and find support there. So yeah, I think it still has more to go on the downside here. I just think I think we're just really seeing the air come out of
Everything. Mhm.
yeah, everything. And
Yeah.
it's going to do it all at one time, I think.
Yeah. Well, they tend to like to do this. I mean, the drops seem to be vicious and brief, and because everyone is stuck now, the people who are in there, they don't want to sell because it's too low. So, it does help the selling in some degree, because if they drop it so fast and you haven't had a chance to get out, then you're going to start saying, well, I'm in there for the long haul.
Well, yeah, changing the whole plan.
Yeah. If they
as the
go down
market
like
goes
1 week
lower.
at a time,
Yeah.
on a Chinese torture type deal, people have time to start saying, I'll get out. No, I'll get out. No, I'll get out. When it drops extremely fast, you're trapped,
Yeah, I think a couple of the CFNs ago that I was on, I said I think that this was going to be somebody's going to be holding the hot potato at the highs type of market, which I think is what we're seeing. Right now. But I think as far as the Russell goes, just doing a little bit of fib retracements from the 2020 low, 50% retracement just above 1700 on that. So that
Yeah.
might be a place to watch for support. But I just don't see these with the kind of damage that we're seeing being done here. And I don't think it's over, just roaring back up to
No.
highs. I think we're going to have a really good trading market for a while with nice big swings.
And that would run into Sunny's stuff pretty good, because she's keeping things on a shorter term basis. So these swings could be caught with a little tight leash on it. Sunny, I was going to ask you, do you look at the commodities at all, or no?
Oh, well, I do. I don't trade them, but I watch a lot of things.
Yeah.
But yeah, which ones are you
Well,
interested?
there's been 3 commodities that have gone way up and still haven't really come down as much: soybeans, sugar, and coffee. And I just was wondering, are they going to go after those? Because, obviously they've brought the oil down a little bit, and some of the other commodities.
It seems to me, now here's where I bring in some fundamentals. It seems to me that with the inflation so high, and they don't count my groceries, my gasoline, and the inflation in this.
Right.
So I think that these soybeans, sugar, and coffee, well, with the amount of coffee I drink, that's got to bring the price up. But I think that they're going to have some strength in these inflationary times. Groceries are 30% more expensive than they were a year ago.
Yeah. Every time I go to the store where we also have gas there, I go, hey, these are 2 things that I spend every day, every week on, and they don't count them in the inflation. When I go to the store, when I get the gas, all in one parking lot.
Buy a
Yeah.
Tesla.
And buy a Tesla, that's right.
I'm
That's
gonna
right.
buy a Tesla after the batteries are bigger
Mm.
or smaller, actually. When I can drive from here to LA and back, then I'm gonna buy a Tesla.
That's in 5 years. You'll be able to, you'll get a 500-mile range on a 100-pound battery in 5 years with solid state technology.
Yeah, that's wonderful. Then it's interesting to me, but not before. And I don't want to
Right
be
now,
left
the
tilting.
Tesla already has a longer range than your bladder. And you can now get the chargers now go at 400 miles an hour. So
Now, I'll,
get a full charge.
since you brought that up, John, let's talk about a stock called ChargePoint, which was supposed to be the cat's meow on, a fleet, charging station.
Yeah, I've been watching ChargePoint for 15 years because I've
Yeah.
been driving electric cars that long. And this is the problem with ChargePoint.
Yeah, let's
The
hear it.
markup, the margin is not in charging. It's
Okay,
in designing the cars, building them and selling them. ChargePoint should be a low margin utility business, which it essentially is.
I gotcha.
However, they did get caught up in the EV boom, and that took the stock up spectacularly, but they've since given up 2/3 of their gains. So I'm a happy buyer of Tesla on 45% pullbacks. ChargePoint, not so much. What's the ticker for ChargePoint? I don't remember.
It's on the screen now. It's CHPT. It was touted as the great thing this year, and all it's done is gone in the toilet.
Well, touted is the operational word there.
Yeah, exactly.
Bitcoin was also touted to go to 100,000.
I'll tell you another one was touted, SLI, which is Standard Lithium, and that was touted as being the fantastic thing as well. And that
Well,
thing
the thing
has
about lithium, the added value about lithium is countries who have no environmental regulation whatsoever.
right.
And that's why all the lithium comes from South America and China, countries that essentially don't have governments. The same is true, by the way, for rare earths. Rare earths are anything but rare. What is rare is governments who could care less if you pollute the local water supply. And that's China to a T.
Right.
That's why the rare earths left the United States. We had the Environmental Protection Act.
Right. Michael, as far as Bitcoin's concerned, we are definitely, unloading a lot of longs
Yep.
with GBTC and ETHE, which is the Bitcoin and Ethereum proxy. And, there's a lot of people who believe in this thing. So, I mean, my feeling at Option Professor has been when it drops, 50 or 60% is the time to see if there's anything there. And the last time it happened was in July, as you could see.
Right.
But now we've blown out the July low, which makes it maybe a horse of a different color.
We're heading for the June low.
Oh, okay.
And so I have measured out this particular drop.
Yeah.
I have been saying for quite a while that it'll find support at 28,800 down to 28,400.
Can you put something up on something that people might trade, like GBTC, which is the one that trades millions of shares every day? Because I, for one, didn't want to get involved in wallets and this and that, so I just went with the GBTC when I want to get in or out.
I've not done any analysis on it, but
Oh,
so I'm not even sure what the equivalent is going to be. So you're right. It is really breaking down. So
yeah.
if it's trading at 23 with Bitcoin at 34,000, if it has to drop another $6,000, what is that going to equate to in this particular?
What
ETF?
percentage is that on Bitcoin? Because I thought this thing might stop at 21 and Ethereum might stop at 18. We'll look at Ethereum in a second, but how much of a drop percentage wise are you looking at in the Bitcoin itself? And I'll just put it to this thing.
6,000.
Looking at another 10%, another 10% maybe?
Yeah, at least.
Okay, so if it's another 10%, that brings you around 21 on this, and that I thought was an area that you might take a bite out of it if it stops going down.
I think you could, but it's just, here's the one thing that I definitely am telling people: do not try to pick a bottom.
No.
Because the market is not giving us any indication that that's what it's probing to do.
Right.
Right now, we're still in that, oh my God, get me out mode. We're still in this, the correction as John's saying, this is a long-term correction. This is just the first drop. Now, Bitcoin's got to figure itself out in terms of, is this going to be, are they going to follow along with everything else, or are they going to stand for what Bitcoin actually represents? You know, is Bitcoin actually going to be a storehouse of value? If it is, it better stop doing what it's doing. But I think,
and also, if you look at the RSI in the May to July timeframe, you're getting a divergence on the RSI.
yeah,
And if you look at the RSI now, it looks like the Titanic.
it does. I do have an RSI, but I'm using it on a weekly.
Yeah.
I mean, I could put it on all of them, but on my weekly, it's kind of getting itself down there and starting to flatten out versus point straight down.
Yeah, but it doesn't have the
So-
same mechanism as it did in May to June when it actually was a buy down here.
Right. That's what it could be forming again.
And like I
That
say,
does
though,
not
you know,
suggest, that does not suggest that it's going to bottom at current level. It
Yeah.
still can drop.
Yeah.
And
and then again, like you can see in the chart, when it does make a low, you do have a few days before it starts popping, you know?
right now, and to be honest, it's like, yes, I am stepping into some of the altcoins. I do have orders in Bitcoin, but they're well below 30,000.
I got you.
So I'd be like, why do I need to step in now? So I
Right.
can write it down. I mean, when they decide they don't like Bitcoin, that's a good one. Yeah, put that sucker up. If
It's the
you
same,
don't-
it's the same as the other one in the same, you know.
It is.
Yeah.
But you can see that one is down, you know, that ETF is down 9% and Bitcoin's down 6%. If
Yeah.
Bitcoin drops another 10% from here,
Yeah.
that's going to equate to like 15, 20% on the
Yeah.
other.
That
So-
21 number on GBTC and 18 on Ethereum, I'm going to be watching that like a hawk because, you know, obviously the
Right.
prices
You know,
are extremely low at that point, and obviously sentiment is ridiculous. All right,
Right.
we only have a couple of minutes left, so I want everybody to get a chance to, again, reintroduce themselves and give their website out and make sure people can get a hold of them, because in this type of environment, information is key, and you guys provide quite a bit of it. So let's talk and start out with Sunny. Sunny, again, a little reintroduction and how they can get a hold of you.
Sure, I'm a mathematician. I've been trading for 41 years. I'm a programmer also. And my website is moneymentor.com. And I have a free Sunday night newsletter and a free live trading room if you want to go to moneymentor.com and sign up for those. And if you want to give me a call and ask any questions, my number is right at the top of my website.
Sounds great. Michael, again, how can people get a hold of you? And do you have anything special coming up?
If you people can get a hold of me by just emailing me, and that email address is michael@mjf1partners.com. My website is basically now really connected to the work that I'm doing on YouTube. So you can always check out my daily updates, which are on the Nasdaq and the S&P on my YouTube channels. And those can be found by Traders Helping Traders, and then my name. So you can do a search for my name, and then you should be able to pick up my channels that way, or Traders Helping Traders, and then my name under that.
Perfect.
And so, yes, what's coming up for me is that my focus for 2021 is called mindset.
Okay. And you'll go over that at the meetings that you've got, right?
I'll go over it at the meetings that I got, and I'm going to be starting it tomorrow.
Sounds good. So get a hold of them. Next one up is John Thomas. John, again, how can people get a hold of you? And do you have something special you want to offer?
I'm at madhedgefundtrader.com. Go to our website. You can sign up for our free daily hot tips, which tells you the 5 most important things happening today. We specialize in global long and short strategies, and we're making a fortune so far this year. We're up about 9% this year after being up 90 last year.
Sounds
So
good.
madhedgefundtrader.com.
Thank you, John, very much. And Leslie?
Yes, you can find me. If you want to send me an email, just go to my website, tradingliveonline.com, and you'll find the contact form and just see a little bit of what I do. But the patterns that I use, I see that they're at these highs. They'll form when we get down to some lows. And so if you want to learn to spot those, just let me know and I'll point you in the direction of which course you want.
Perfect. And as far as Option Professor is concerned, we have packages that we have available for each individual objective for income growth, value, dividends, as well as international, which we didn't talk about, where we think there's a lot of opportunity, and also in some speculative areas like energy and metals. So that's optionprofessor.com. Go there and we'll get that information to you and you can check it out. Right now, I'm sending it back over to David, and thank you everybody for being here. We'll talk again down the road, and we have these broadcasts coming up tomorrow. So again, thanks everybody, and stay tuned to these broadcasts that are coming up in the next few days.
All right. Yeah, so the presentations for the Synergy Trader event starts in a couple minutes here.
Mhm.
So and all the guests for today are doing presentations on the Synergy Trader event. So Leslie will be at 2 p.m. Eastern today, and John will be at 6 p.m. Eastern today. Michael will be at, the Option Professor will be at 10 a.m. Tomorrow morning. Michael will be at noon Eastern time tomorrow, and Sunny will be at 8 o'clock Eastern time tomorrow. So we got a full 12 hours of presentations both days, and the first one will be starting here in a few minutes. But I just want to thank my guests again for today, and remind everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app to get all the updates. Also, all the recordings are posted to TimingResearch.com as soon as I can after each event. So I just want to thank my guests again for today, the Option Professor of OptionProfessor.com, Sunny Harris of MoneyMentor.com, Michael Feligera of LogicalSignals.com, John Thomas of MadHedgeFundTrader.com, and Leslie Jouflas of TradingLiveOnline.com. Thanks, everyone.
Thank you, David.
Thank you.